G'day folks, Jim here from Orchard Forex. It is Sunday the 16th of May. Well, markets were generally pretty choppy last week, driven firstly one way last Wednesday by the much higher than expected US inflation report, and then on Friday heading in the opposite direction on the back of the weaker US retail sales figures. The possibility of higher inflation and the question of whether the Fed are falling behind the curve is going to continue to drive markets in the months ahead, but the retail sales did alleviate some of the near-term concerns that conditions could get out of control. Looking ahead, in the absence of a whole lot of data this week on the calendar, I suspect we're in for similar conditions, albeit that the US dollar does seem set to remain a little bit under pressure, which may allow for the prospect of an upside breakout in gold. That's looking pretty healthy to me. And also for the possibility of a continued grind higher in the stock markets if it appears that the Fed are going to be able to ignore the one-off inflation reading last week. And this will allow them to maintain their current mantra of not moving on rates until 2024. So only the future data is going to allow us to form an opinion on that. And at the end of the video, we'll take a look at the calendar to see what's coming up. But there's not an awful lot really that's going to be market moving in the week ahead, apart from the PMIs perhaps on Friday. Anyway, without further ado, we'll go and have a look at the chart, starting as usual with the dollar index. Okay, so here we are, and I think I put this channel up last week that we were watching. We were holding above the base of that channel this time last week, but since then we've pushed the boundaries and we've made a few dips below. And we've actually have closed the week just below the base of the channel, and it suggests to me that we probably have got some more downside ahead for the dollar. The daily charts not showing us an awful lot, so I'm not really expecting a hugely directional week ahead. But I do think the dollar is likely to stay heavy. And if we go forward to the weekly charts, we can see that the MACDs do look as though they're turning lower. And as you can see, we've got this downside break of the channel. Now, one of the things I'm looking at, one of the reasons I am a little bit bearish on the dollar is, let me show you this chart here. Now, this chart is mapping the differential between the US 10-year bond rate and the German 10-year Bund. And the differential has been moving out in favor of the US dollar over the last year, really. But we've since seen a sort of 12 to 13% pullback, and it does look to me, this is a weekly chart, that the differential is going to come back in favour of the German Bund. So I think that's going to be supportive of the euro. We did move out to a differential of 211 points. This differential is made up by the US 10-year bond rate, the 1.63, plus the German Bund rate, which is at minus 0.124. Add those two together and you get the differential. Now that's come right in, mainly because US rates have been hanging around this or 1.6 level for quite some time, but German rates have improved as the euro or the EU begin to get their act together as far as vaccinating their population, and also the economic numbers have been a little bit more favourable. So I think this is going to continue to head lower. The differential, I think, is going to head lower. The weekly charts certainly tell us that there's some downward momentum. So, like I say, I think that is going to support the euro. There's some moving average here at 1.7, which is not far away. So most of last week we were trading about 1.8, 1.82, but we come down to 1.75 now. And I do like it lower, so like I say, I prefer to be long the euro than short. And on that note, we will go and have a look at the euro charts. Okay, so we'll start off here with a 4-hour euro chart. As we can see, we had this consolidation down here for a good part of the week, and then on Friday, this is the retail sales number. This is the inflation number. Saw some US dollar strength, followed by some consolidation, and then the retail sales took us in the opposite direction. And right now, I'm beginning to think that we're just under 121.5. I think we might go back and test this minor descending trend line here, 121.70, and then the previous high up here at 121.80. So that area is going to be a little bit problematic perhaps for the euro early in the week. And then we've got 122, which is a FIBO level, and above which we go back to this high here, so 122.40, and eventually, as I've been saying in the past, towards this 123.5 level. On the downside, we really need to hold this 120.75 now. This rising trend line keeps us in the channel. So 120.75. A break of that, well, in that case, I think we could get back down here to 119.80, 119.50, something like that. I don't think we're going there, but if we did, I still think it'd probably be a buy on dips. If we move forward to the dailies, they're not showing us an awful lot either on the charts, the momentum indicators, which is why I'm not particularly bullish or bearish this week, but I do maintain or retain the upside euro view. The 100-day moving average comes in here at 120.40. Don't think we're going below it, so I'm basically a buyer on dips. Moving ahead, we'll just take a quick look at dollar yen. I think there are better things to trade than dollar yen. And as you can see on this 4-hour chart, we've got this pivot going back quite a way now. This goes back to early or mid-February. And we're not too far away from it, so I think the 4-hour charts are probably a little bit negative. It wouldn't surprise me really to come back and see us sit on this is what, just under 108.80. It's 50 points away, but generally pretty range bound, pretty choppy. I think you probably can trade the range. If it got down to 108, you'd probably be a buyer. If it got up towards 110, you'd be a seller. I think that's probably pretty much covers it. Sterling's quite interesting. Here we have a 4-hour chart of sterling, and we've got this reverse head and shoulders. We did break above it, as I thought we might do last week, so we broke up. It did look like there was a bit of a flag formation forming, but eventually what we did was the perfect deal for a head and shoulders. We came back, tested the neckline, which is held, and now we're squeezing slowly higher. I don't expect too much action in sterling this week. If the euro is going to remain range bound, sterling probably is as well. There's obviously concerns about a third wave breakout of the COVID in the UK, and so I think that may weigh on sterling somewhat, or at least prevent any runaway to the upside. But I do like it higher with this the potential here from the neckline down to the base takes us up to about 143, 144 eventually. So it's going to take a while in coming, but I generally think that's the direction of it. Have a look at the daily charts. They look very mildly positive. So we've got to take out this 142.30, 40 area before we really start to make hay. But if we do, then I'm looking for a 143, so 143, 144 type move. Just quickly on the Aussie, which is a bit like dollar yen. We've got this pivot line going back quite some way. We did make a break higher, which failed after the inflation data out of the States. It brought the Aussie back down, but it's slowly recovering. It's still below 78 cents, and really we need to take out this sort of 78 to 80 level now to allow us to head back towards 80. The 4-hour charts do look positive. I think we could see early gains, some gains early in the week. Further out on the dailies, let me just blow that up. So here we have a daily chart, and as you can see, we've got good support down here. The blue line is the 100-day moving average, and the rising trend support coming in, well, basically at last week's lows, really. Where's that? So 76.80. So I want to take out this level here. Until then we do that, I think it remains choppy. But longer term, I'm still supportive of the Aussie. I think we're probably going to 80 cents with iron ore prices being where they are. The Aussie should remain fairly well supported, I think. So buying dips is the general scenario there. That's probably enough on the currencies for the moment. I won't do the Kiwi because the Kiwi looks fairly similar to the Aussie. But the thing that really quite interests me at the moment is gold. So we'll go and have a look at that. Okay, so gold is doing its best to break above this sort of 1844, 45 level. It's going to find it difficult. There's plenty of resistance ahead, notably the 61.8% FIBO level of the move down from this high up here, which 1958. So the move down from there we're just coming back to the 61.8%. Actually, let me get rid of this. It makes the chart a bit clearer. Okay, so you can see the 61.8% level there. I think we are eventually going to take it out once we can take out this 1850 level, but there's still further resistance ahead. We've got the 200-day moving average right here at sort of 1850, and the top of this. If we are in a channel, the top of the channel comes in at around the same level. So I wouldn't get too excited, but I do think slowly but surely we're going to take out the sellers in that area, and once we do, then I think we can begin to make a move higher. If we go forward to the longer term charts, and I need to go to another system for that with more data on it. Now, I've shown you this chart before. This is a monthly gold chart, so it's a very long term affair. Don't get too excited about it, but it'll give you the overall view of things. A couple of weeks ago I explained how this cup and handle formation works. You can read about that on the internet, but it does appear to me that we've got this cup, the handle, and what we should be seeing once the handle is broken on the top side, a move back towards this line, so 2050, 2060, and then eventually we get this equality move back right up here. That kind of takes us above 3,000. Now that's a very long-term play, but it's got me being quite bullish on gold for the longer term. Not really sure what is going to drive gold to those highs. Maybe it is a much weaker US dollar down the track, but worth keeping an eye on. In the meantime, I'm a near-term buyer on dips, really. We'll go back to the MT4 chart. Now, it may be that we need to chop around a little bit more before, if and when we do break higher. We've got the last week's lows down here around 1810 and the 100-day moving average just below 1800. I'd certainly be a buyer into that sort of weakness because I think eventually we are going to push to the top side. So in the meantime, it may be a range trade, but I'd certainly want to be playing it from the long side. And out of interest, we're currently running an EA that has a long gold bias, and in a few weeks' time, hopefully we'll be able to get that up on our website, and we'll show you how that's panning out. But it's been doing very well for us. We've been running it for about a month and a half, and basically we got in, or I think about 1750, but we've been running it long ever since, trading it in and out. But I continue to maintain that bias and think we will head higher over time. What else have we got? Oil. I'll just have a quick look at oil. Here we have a daily chart of West Texas Intermediate. Now, it's not doing an awful lot. I've got no particular interest in trading it right here. I think there's easier things to trade. But eventually, I think when we take out this sort of 67.5 level, the previous high, I do think oil can head on towards $80 a barrel. The support right down here, sort of 62. I wouldn't, if it broke below here, $60. I wouldn't be in it. I don't. You know, we might then see a deeper correction. But until then, I kind of like to buy dips towards 60, and so you need to keep your positions fairly small. That's $5 away. But I think we're heading towards 80. So that's worth keeping in mind. And the reason I think it's heading toward 80 is that, one, because of a weaker US dollar, and B, as the world comes out of the pandemic, if we ever come out of the pandemic, global demand should increase quite rapidly. So I think that should underpin the oil price going into next year. We'll have a look at the stock market. Here we have a daily chart of the S&P, and as you can see, we had a bit of a clean out last week after that inflation data. Came back down, tested this trend line here. So far it's held. The daily indicator is not showing, it's a little bit negative if anything, but I suspect we can probably grind slowly higher over time, and we'll take out these highs above 4,200, and eventually, as I've said many times before, I think we probably sort of head on towards 4,300, maybe 4,500 by the end of the year. But it's a long, slow grind, and we're going to have to put up with these kind of accidents, these short-term accidents, as time goes on. At any stage, though, if we were to go back below, say 4,000 now, where that's around here, I think I'd probably be cutting down on any long positions I've got, because that could be the prelude of a deeper correction. Below the 100-day moving average, currently at 39.30, there's not really an awful lot. We've got this low here, 38.40, and then the 200, the 23.6% FIBO of this move up, and the 200-day moving average coming in here around sort of 37.5. So that's a long way off, but I do think a break of 4,000 could see a bit of a deeper retreat. So just be careful there. What else have we got? Just take a quick look at the Aussie market. We had that nasty spike down. It actually would have taken out a few stops because that broke this rising trend line, took out a few stops, I guess, but then has headed back into the channel or above the line that we were talking about here. And now it looks to me we need to really take out this sort of level here, sort of 70-70. If we can do that, and the 4-hour charts are pointing a bit higher on Monday, I think we might go for a test of 70-70. And if we can take that out, then I guess we can head back up towards this sort of 71.50 level. And hopefully further out down the track, we take out this sort of 71.50 level. This is the SPY I'm doing here. I'll show you the ASX 200 in a minute. But if we can take that out, then we can move on to sort of 7,200, which equates to about 72.50 on the ASX 200, which would be an all-time high. The all-time high in the SPY, 71.41 by the looks of it. The dailies not showing us an awful lot, so possibly it just remains pretty choppy. And the weeklies are not really quite sure what to do. They look as though they do want to turn a little bit lower, but for the time being, they're not rolling over. So I think you just go with it, trade from the long side, looking to take out this pre-COVID high and march on to new highs as time progresses. With commodity prices, iron ore, copper still pointing higher. I think the Aussie stock market and the Aussie currency will remain supported. A higher Australian dollar will create headwinds for the local stock market, but even so, I think they can both progress to higher ground. Okay, that's about it. We'll have a quick look at the calendar. Okay, so here we are. Monday doesn't seem to have a great deal. We've got the Chinese retail sales. They're looking for another decent number, so that might move the Aussie around a little bit. And later in the day, various central bank speakers. We've got the Fed's clarity and a couple of Bank of England speakers. Tuesday, with the RBA minutes, probably not going to tell us an awful lot. And the UK unemployment figures come out. We have got the Q1 EU GDP preliminary figure, so that'll be of interest, as will ECB President Lagarde's speech later in the day. Then not an awful lot out. Inflation data from the UK and from the EU, so that might, and also from Canada. Which may see a bit of action at the station there. We have got the FOMC minutes out late on Wednesday, which should continue to suggest that the Fed are on hold for as long as we want. They're not worried about the inflation figures. Then on Thursday we've got a little bit out of Australia. There's consumer inflation expectations, as well as the unemployment figures for April. The rest of the day doesn't seem to have an awful lot going on. Another speech from Christine Lagarde, and then on Friday, which may be the real action of the week, we've got the preliminary, the flash PMIs coming out, and that'll take up most of the action during the day as we go through the session. But there's not an awful else out, and very little out from the States really. So I'm not expecting a huge. Overall, I think it's going to be fairly choppy. But as I say, I prefer to be slightly short the US dollar than long, and I'm looking to buy dips, particularly in the euro. That's about it. So we'll call it a day there, and we'll talk to you again next week. Cheers.